Welcome to the Farming Without the Bank podcast, the show with a no BS approach to money, hosted by a farm strategy expert and authorized IBC practitioner. Join us as we get real and expose the flaws of traditional financial institutions in order to help farmers take control of their finances, create peace of mind, grow their wealth, and leave a legacy. Now, here's your host, Mary Jo Ehrman.
Hello and welcome to today's podcast. Thank you again for tuning in. I very much appreciate it. If you guys have been enjoying these podcasts, please leave me a review or 5 stars or whatever you would like. I would very much appreciate that. Today, let's talk about the 5 basic principles behind the infinite banking concept. And these 5 principles can also be found in Nelson's book, Becoming Your Own Banker. So most of you have read my book, Farming Without the Bank, and that is just really a nice introduction to Nelson's book, Becoming Your Own Banker. So I highly, highly encourage you, if you have not read his book, please go on to farmingwithoutthebank.com and you can go to the store and you will find his book. It is the black book with the red letters banker, and it has a safe dial on the front. So please order that one. It is really going to give you a lot more insight. And I know that you guys read now, because if you're going to read my book, you probably can read his book, right? Right. Okay, let's just dive right in, because I don't want this to be a super long episode, because nobody likes to listen to long episodes. And maybe I'll talk a little faster than normal. Number 1 principle is to think long range. And it is one of the first things that Nelson talks about in his book. And those of you that don't know him, he was a forester by trade. And so everything that Nelson did was long-term thinking. And this really brings up the subject of the fact that people think this is a get-rich-quick scheme. Oh, she's just going to sell you some life insurance and she just thinks that you can get rich. It is not get-rich-quick, okay? And which leads me to another principle down the road that I will be talking about, but you need to capitalize this thing. And so you need to put the money in. But what Nelson is saying, I'm not going to talk about that one right now. The first principle is to think long range. You have to think long term with this thing. You are going to have uninterrupted compound interest. The reason that happens, the reason that we use life insurance is because it allows us to do this very thing. Nothing else out there allows us to put our money in it, and it continues to pay us interest even when we borrow against it. Because nothing else allows us to borrow against it and earn the dividend. So we have a mutual company. But we need to think long term. Now, I'm going to challenge you. Everybody wants this to work yesterday. Everybody wants to get away from the bank yesterday. A lot of people read my book, throw it down on the table, and say, well, this is a bunch of BS because I'm never going to get away from the bank in my lifetime. Or I thought this was going to work overnight. None of it is going to work overnight. Did you start farming with 5,000 acres? Did you start ranching with 500 head of cows? Whatever it is you're doing, you started that small scale and you grew into it. But that's not what you want for your finances. You want that to happen overnight. Be realistic. This is going to take some time. Some of you might not see it in your generation, but it's a matter of passing it off correctly so the next generation is seeing that. Think long term. Get over this instant gratification that we want and think about what's going to happen. If we start this process and we have our money in there earning uninterrupted compound interest long term, 20, 30, 40, 50 years, 60 years. I've got 20-year-old clients. They've got 60 to 70 years of putting money in these policies. So if you don't have long term. Say you're 60 or 70 and you think, well, this doesn't matter. Yeah, it does. You still have money in there earning you uninterrupted compound interest. It's not going to be the same time frame, but it's still in there earning you something. So I encourage you to think a little more like Nelson. Think about when you're going to plant that next tree, and is it worth it? Or are you just going to say, nope, it's not worth it. I'm not going to wait 30 years to see that tree grow. I'll just go without them for the next 30 years, right? After you plant a tree, you get to about year 10, 15, you're like, whoa, those things are getting pretty big. They're starting to look really nice. That's exactly what happens in the policy. Year 10 and 15, things are really starting to take off and things are starting to go well. We want to think long term. And that brings me to the question of how long do I have to pay this premium, Mary Jo? I don't want to pay this premium the rest of my life. Really? Why? Why wouldn't you want to put money into something that is constantly giving you a return and a bigger return every single time you put money in because it's earning the uninterrupted compound interest? And it just keeps getting bigger and bigger and bigger like a snowball. Why would you ever quit putting money in? Nelson paid his life insurance policies till the day he died. I plan to pay my life insurance policies till the day I die. It is the most efficient place I can put money, especially since I had been doing it for so long. Don't stop doing something, especially when it gets to the point where you're seeing the benefits. Keep doing it because it is just going to create more income for you. So the first principle, again, think long term. Number 2, this is a process. This infinite banking concept is a process. Number 2, this is a practice of imagination, reason, logic, and prophecy. Okay? Imagination, reason, logic, and prophecy. You have got to use your imagination. The same thinking that got you into trouble is not the same thinking that you can use to get out of trouble. We are constantly having to change our thinking, constantly having to learn. And it was funny because I was talking to a farmer just recently, and he said, yeah, my son's always on the internet investigating stuff. Right after he told me that his kid bought this, it's a grain cleaner. And so had he not been investigating all this stuff and trying to get better, where would they be? In the same position they've always been? We're just going to become complacent? Nelson always said, use your imagination. If we asked him a question, he wouldn't answer the question. A lot of times he would yell back at us and say, did you read the book? It's in the book. And he would make us go back and find our answer, make us think rather than just giving us the answers. We need to think. Out of the thousands of farmers that I talk to, it is so fun to see what everybody is coming up with. Because guess what? You're not thinking like the average person if you're going to talk to me. And so everybody is doing something maybe a little bit different, or everybody is looking at a certain alternative. And just as an example, one of the things I see a lot is rotational grazing. It is so cool to see that because they're thinking differently than what has always been done. We cannot make progress if we don't think differently, if we're not looking at things differently. This is why I love podcasts, because they are providing solutions to problems. They're making us think differently. We're having to be creative. We're having to use our imagination, right? We're not just sitting back and listening to some radio station talk about all the problems and no solutions. This is a huge, huge part of this. This is why a lot of people do not understand infinite banking, is because they don't have an imagination. They cannot reason things. There's no logic there, right? We have to have all of those things in order for it to make sense. But in my opinion, the biggest one is imagination. I saw it right away. I saw the potential. I didn't get scared of it. I saw it. A lot of people are so scared of it, their imagination is completely shut down. Look at little kids. They have huge imaginations. They will try to create something out of something so basic, and they're like, oh, let's use it for this. My daughter, when she was little, my mom and dad have a junk pile, which every farmer has a junk pile, right? So she always likes to go treasure hunting. So we went up to the junk pile and she found a head gasket and she was going to bring that back. And I'm like, what are you going to do with that? Like, it's dirty, it's filthy, what? I mean, seriously, a head gasket? It's oily, it's dried up, it's dusty. She put pictures behind every hole and made it into a picture frame. She drew pictures and taped them on the back and made it into a picture frame. That's imagination. Our society as a whole kills our imagination. Do it this way because that's what the noise is telling you to do. That's what everybody else is doing. Don't be the abnormal one. You just follow the flow and just do what everybody else is doing. We go to school, we get our hands slapped for imagination because we're not supposed to do what they're not teaching us. Use it. Find it if you've lost it. But that is what is going to make people see the potential here. Number 3, don't steal the peas. In Nelson's book, he has an illustration of a grocery store, and the owner of the grocery store is stealing peas. Instead of buying them off the shelf and going through the front door, he is going through the back door, which is costing his company money. Well, guess what? When he starts to steal the peas, the employees start to steal the peas. The reference that Nelson is making here is that if you're going to borrow money from your life insurance policy, you need to pay it back. Don't be stealing the peas. In my book, I talk about the fact that you're stealing from yourself. If you're using cash and you do not pay the cash back to that savings account from which you took it, or the checking account from which you took it, if you don't pay yourself back plus interest, you are stealing the peas. You not only stole the peas, but you discredited yourself because you didn't think you should pay yourself interest. Now, if you've borrowed money and you continue to make deposits into that savings account, well, fantastic. You're essentially paying yourself back. But if we save up for something, we buy it, and we quit depositing money into savings, we no longer have a payback. We just stole from ourselves. Don't steal the peas. If you're stealing peas, guess what your kids are going to do? Steal peas, because we haven't taught them how to financially do things differently. We've gotten to where we are in society today for a reason. People quit teaching finances. People quit talking about it, or they never started talking about it. People would rather talk about sex with a stranger than talk about their finances. What does that say about our society? A private matter is even a more private matter, in my opinion, is more easily talked about than our finances and what we're doing with our money. Doesn't mean you got to tell somebody how much money you make, but why can't we talk about what we're doing with our money, how we're creating income? The people that have wealth talk to other people to learn what they're doing and how they're doing it. We need to be doing the same things. If somebody doesn't want to talk about it, it's probably because they're embarrassed and they don't know what they're doing. People that are successful are happy to share that information. Don't steal the peas from yourself. Don't steal the peas from your kids. If you're going to take a policy loan, you need to repay that. You need to be an honest banker, as Nelson calls them. Pay it back plus interest. Besides the fact that if you have a life insurance policy with a mutual company, you are part owner of that company. Why would you borrow money from your company and never pay it back? What happens to your company? Well, what if they financially are hurt and you were part of the cause? It's not free money, people. It needs to be paid back. And I talked about this in my podcast that I had on taking loans. It's not free money. Be honest with that money. Be a good steward of your business. Okay, that was number 3. Don't steal the peas. Number 4, don't do business with banks. Well, that's pretty obvious, right? Nobody wants to. That's the whole point we're here, is to farm without the bank. We don't want to do business with the banks. And I'm not going to talk a lot about this one because I talked about this one in a previous podcast where I talk about inflation and that the banks are turning money and that they're actually causing a lot of the problem. The banks and Federal Reserve. It's the fractional reserve banking system. So a lot of you who think I don't like your bankers, it's got nothing to do with the bankers. It has everything to do with the banking system as a whole. And so if you haven't listened to that podcast, I encourage you to go back and listen to that one because we don't want to give them more leverage. You've already given them your livelihood as collateral. Farmers are about the only ones that do that. Hand over your livelihood, your house. Everything is tied into that farm. They have it all for collateral. Don't do it. We want to get rid of them. Do we have to use them along the process? Is this going to take overnight? No, go back to number 1. This is long-term thinking. This is not going to happen overnight. We might need to use them along the way, but let's eliminate them as much as we possibly can. Reduce how much we need them. Okay, that's number 4. Don't do business with the banks. Number 5, don't be scared to capitalize. This is probably the biggest thing that I see. We have to have money to pay the premium. Absolutely. But if we don't put anything in, we don't get anything out. If you don't put money into your savings account at the bank, you can't take any extra out. If you put $10,000 in, you can only get $10,000 out. This is the same thing. Don't be scared to capitalize. If you put peanuts in, you get peanuts out. Nelson always said, don't buy life insurance like you're going to Walmart. Put in what is very comfortable and start to build that system. You're going to have to go back to number 1. Think long term. We might not have access to all that money up front. We're going to have access to anywhere up to 75% of that money. But don't be scared to capitalize and think long term. Okay, it's going to maybe take me anywhere between 7 to 10 years to break even. That's okay, because after that, kind of like gravy, it just keeps coming in through dividends and uninterrupted compound interest. The first 4 things really make a difference when we talk about this one. That's why Nelson had 49 life insurance policies. He wasn't scared to capitalize. We can't start a policy that's too high, but we don't want to start one that's too low. I have some clients that just don't have a lot of money to start, and that's okay. We can put $3,000 of premium in a year, but don't expect to have this huge growth and all this money because we don't have anything there. And how do we capitalize? How do we find the money to put into these policies? That too was already in another podcast. If we can get past Parkinson's law, which Nelson talks about in his book as well, a luxury once enjoyed becomes a necessity. If we can get past that and we can get past the Joneses, we can capitalize these systems. Nelson had $500,000 of land debt at 22% interest. How did he get money into the policies so that he could borrow against the policy at a lower interest rate and pay down the snakes and dragons? He did that by capitalizing the policy. He did that by finding money, and he found money by beating Parkinson's law. He didn't live up to the Joneses. He scraped by for a while, did without a few things so that he could get some money into the policy. This is the same thing. Do you want to sacrifice anything and not buy something so we can get money into the policy? You don't need to do that. You don't need to beat Parkinson's law. You absolutely do not have to. You do not have to change your lifestyle one iota, but then it's not going to happen as quickly as you want it to. Long term is going to become long term. So don't be scared to put some extra money in because it's just going to make you more money long term. Okay, so let me review those because that was number 5. So number 1, think long range. Number 2, use your imagination, reason, logic, and prophecy. Number 3, don't steal the peas. Number 4, do not do business with the banks. And of course, number 5, don't be scared to capitalize. That is a very quick lesson in how to become your own banker. And the book, that's just the first part of Nelson's book. Part 1, there are other parts to his book. So again, if you don't have it, I highly, highly, highly encourage you to get it. You can go to farmingwithoutthebank.com. You can order it there, because my book talks a little bit about this stuff, but it does not hit it home quite like Nelson's does. And it is never a bad thing to become more educated. The more educated you become, the more you understand that you're going to want to capitalize these banks. Every single client that I have who continues to read and educate themselves on more and more stuff start more and more banks, because they understand that they need to capitalize. They understand that starting a bank is going to take some money, and you're not going to have it all up front. Any business you start, it is going to cost you something. And so, can we get these things started sooner, recover those upfront costs, and have more later on working for us? If you have questions, comments, or concerns, please let me know. Mary Jo at farmingwithoutthebank.com. I would be happy to answer those for you. If you have liked this episode, please leave a review or a rating. I would appreciate that as well. And let me know, as always, if there's anything that I can do for you. Otherwise, you have a fantastic day, and I appreciate you listening. Thank you.
Thanks for listening to the Farming Without the Bank podcast. We hope today's episode has inspired you to take control of your finances in new ways. Don't forget to check out our website, farmingwithoutthebank.com, and engage with us on our Facebook page, Farming Without the Bank. Join us next week as we smash more financial myths and empower you to accomplish your financial goals.